Welcome back. We're going to dive into today's market pullback. And to do that, we're joined by Kim Forrest, founder and chief investment officer at Bokeh Capital Partners. It's good to have you join us. Thanks so much.
Great to be here on a Friday.
Yes, thanks for joining us on a Friday afternoon. I mean, it's interesting because OpenAI announcing this deal today of funding supported by some big companies, right? You've got Amazon, Nvidia, SoftBank. Markets are down, though. Like, are investors just not as excited about funding announcements like this anymore, do you think?
Well, I hate to point this out. I'm master of the obvious. I think that's my gifting here. These are more circular deals. And I think people are really concerned about these companies, although they make a lot of money and have access to a lot of money, they just keep piling it in this circle, right? So Amazon, who provides web services to OpenAI, among others, is funding OpenAI. And you know, I'm very practical. I see all this money going in here. I enjoy using AI. I don't trust it because it's not correct enough for me to trust it. However, what I really don't trust is that people are ever going to pay the huge sums of money that has been needed to develop it and to continue to develop it. So a lot of stuff has to change for me to get wildly excited about large language models in particular. Other forms of AI, I'm all about it. Smaller problem-solving AI, awesome. But this big, spectacular, you know, AGI sort of AI is scary from a financial perspective. And I think that's what today's market shows you, that other people are like me, not convinced that the financial case for it makes sense at this point.
Interesting. Also today, private credit stocks taking a hit lately, really, not just today. Do you think Jamie Dimon was onto something when he warned of cockroaches in the financial system?
Well, if you roll the tape back, he pretty much has talked about cockroaches all the time, right? He always has that glass half empty. Wonder if he started as a bond manager, maybe. That's always my joke. You know, the equity people are half glass full, bond people half glass empty. But he is right in this. And I think, you know, I've always been cautious about recommending private anything, but specifically private credit for a lot of reasons. Companies, theoretically, a private credit company should be able to return higher shareholder value because they don't have the structure of a bank. But they also don't have the structure of a bank to keep them from going out on the risk curve. And I think that's really what we're afraid of here and what is causing the sell-off across all financials, because rightly so, and I'm sure Jamie Dimon would agree with this, the financial sector is all linked together.
Mm-hmm. It's so interesting, too. I mean, I want to go back to what you were saying before, you know, about the big tech companies and all this spending that they've got going on right now. Like, a lot of them are saying, a lot of these hyperscalers, that they're going to continue with their AI capex. But how likely is that if people are worried about this aggressive spending and the stock is dropping, how can these companies continue to move forward with that spending?
Well, the Magnificent Seven are money-making machines at this point, right? Or we'll say the Magnificent Four of the Magnificent Seven. That's Microsoft, Meta, Amazon, and to a lesser extent, Apple. But they all have a lot of money that they can pour into this project. And as long as they're pouring into the project, there will be other companies like private equity and venture capital funds that are willing to spend in this new area. They always have been risk takers, so they're going to, you know, take risks and continue to fund. But you know, I'm practical to a fault. I just don't see the return for investors in this in any kind of short way, given the billions of dollars that have been spent and hundreds of billions of dollars that are promised to be spent in the future. Who's paying the bill? Mm-hmm. I don't see it.
Also, Nvidia shares dropping again today. They're down to end the day almost 5%, 4.2%. This ever since they reported those earnings on Wednesday, right? That seemed strong, but had negative results on the stock market. What do you make of that, of investors, you know, being a little worried about those results? And also, do you see this as a potential buying opportunity?
Sure. Well, I think the investors are kind of running the scenario that we're talking about right now through their heads and going, well, I've made a lot of money, maybe time to take it off the table. The other thing is, Nvidia has been a momentum darling. If you are a momentum investor, 2023, 2024, and 2025, about halfway through 2025, it was a wonderful time to own it, but it's gone nowhere. So this is kind of a death spiral that a lot of momentum companies go through whenever they stop growing. It's a great company, but it's not for momentum investors anymore because they're not putting up those ridiculous numbers that they have in growth. So, it takes a while for a once momentum stock to find its place in the world. And that's, I think, what we're seeing here at the beginning of Nvidia selling off is momentum. It's not a stock for them.
Will be interesting to watch this unfold. Okay, Kim Forrest, founder and chief investment officer at Bokeh Capital Partners. Appreciate your time. Thanks so much.
Thank you.